Hello everyone, this is the pre-market report video for 4th January 2023 in terms of Nifty and Bank Nifty. Yesterday, Nifty closed positive for the second consecutive day and sector-wise both banks and IT each contributed 0.5%. Then after the market hours, US market opened positive. However, within the first half hour, all three US major index turned negative. So what caused this fall? There are three main factors to consider. First, Tesla sales volume. Second, Apple stock downgrade. And finally, falling oil price. First, let's talk about Tesla. On Monday, they released their sales volume for December month. On quarter-on-quarter basis, they sold approximately 4 lakhs and 5,000 cars. Even though this is significantly higher than that of the previous year, however, it's below the Bloomberg estimation, which is around 4 lakhs and 20,000 vehicles. To be frank, on year-on-year basis for the whole year 2022, Tesla sales volume was increased by 40%. The problem here is that the market priced Tesla share on the basis of expecting it to have at least a 50% growth rate. As a result, Tesla stock dropped 14% in one day, and in the end, it recovered slightly and closed 12% down. Just for info, Tesla is one of the index heavyweight stock in both S&P 500 and Nasdaq. Second, Apple. BNP Paribas downgraded Apple from outperform to neutral and lowered its target price from $180 per share to $140 per share. This caused Apple's market cap to slip below $2 trillion and the stock price to drop over 4%. We all know that Apple is also the index heavyweight stock on all three US major index, including Dow Jones. Finally, falling oil prices puts pressure on energy-related stocks in the US market. On Sunday, IMF's managing director warned of a potential recession as three major economies such as US, Europe and China all slowing simultaneously. She also stated that the global economy would be even tougher in 2023 than it was in 2022. As a result, oil prices opened and traded nearly 4% down. At this time of this video, WTI crude oil is trading at $77 per barrel and Brent crude oil at $82 per barrel. Looking at the major indexes, Dow Jones decreased marginally by 0.03% and S&P 500 was down by 0.4% and Nasdaq was down by 0.76%. On the bright side, the dollar index is still hovering around 104 and the 10-year treasury bond yield decreased by 1% to 3.76%. However, US VIX index increased by over 5.5%. As far as the tech stocks other than Tesla and Apple, all closed positive. Regarding Indian ADRs in the US market, they were mixed, with bank ADRs closing flat despite its 2 days increase in the Indian market, whereas both IT ADRs increased and closed over 1% positive. Then SGX Nifty closed at 18,243 at 3 a.m. Indian Standard Time, indicating a potential gap down opening of 50 to 60 points. So that's all about what happened on global market. Now let's discuss about the India related info. First, Indian government announced that they are exempting public sector entities from the minimum public shareholding norm. At present, the norm is that all listed companies must have at least 25% public float in the stock market. This exemption is good news for public sector stocks like LIC and Indian Bank, as the government is owning more than 90%. Previously, this high government shareholding puts pressure on those companies' price. It's good now. I consider this is very positive for both LIC and Indian Bank share. Next, rating agency ICRA has revised its growth estimates for the Indian road logistics sector for the current fiscal year. Now they expect the growth of 11 to 13%, which is up from its previous estimates of 7 to 9%. This news is positive for all logistics sector stocks like TCI and Container Corporation of India, etc. Third, Reliance, their retail FMCG arm, has announced that they acquired a 50% stake in some major Gujarati beverage company. This news is positive for Reliance stock despite the recent pressure from the windfall tax. Finally, some info regarding IEX. Their total trade volume for December 2022 was decreased by 7% from the same period last year. However, their overall volume on the exchange was increased by 9% on month-on-month basis. It's kind of indicating positive, but honestly, it's unclear and I'm not sure how this will affect the share prices. As a summary, last night the US market ended on a negative note, but many tech stocks still closed positive. So, this could be good for Indian IT stocks today. Additionally, there is a chance that Reliance Industries may perform positively due to its recent retail news. However, flat banks ADR and a gap down indication on SX Nifty are the worrying things. As for the items to look out for today, at 10:30 a.m. Indian Standard Time, S&P Global will be releasing its Indian service payment data for December month. The expected value is 55.5. This data, along with the US future market, will likely to have an impact on Indian IT stocks. In the afternoon, there will be a release of consumer inflation, composite and service payment data for December month for European countries like Germany, France, and Spain. Then, in the aftermarket hours, there are several important items to keep an eye on. US will be releasing its number of available job openings, which is currently forecasted to be around 10 million jobs. Additionally, the Institute of Supply Management will release its own manufacturing payment data, which is widely considered to be more important than that of the S&P Global data. Now, coming to technical, starting with the candlestick for Nifty and Bank Nifty on the daily chart, it forms a bullish 3 inside up candle formation. This means that over the past 3 days, we have seen a drop followed by a rebound and then an increase, which is a completion of bullish reversal. This suggests that there is a good chance that we'll see an uptrend in the near future. Then coming to moving averages and technical indicators, day before yesterday, Nifty has moved above its 5 and 10-day moving averages, and now, yesterday, it moved above its 20-day exponential moving average. So, as a moving average summary, it's a buy signal. However, the technical indicator summary, it's still a sell signal. The RSI value has improved slightly from 47 to 49. Now, let's move on to the Bank Nifty. Finally, both moving averages and technical indicator summary have improved to a strong buy signal. Even RSI value has also improved from 54 to 57. Thus, that too improved to buy signal from neutral yesterday. Turning to options for Nifty, first from option change in open interest. Weirdly, there was a huge number of significant new put option open interest added at 17,700 and 18,200 got the new maximum nearby put option open interest, and there are some call options added at above 18,400. So it's difficult to make any conclusions based on this data. So from overall options open interest data, 18,200 got the huge short straddle and also it got the maximum call option. So the next nearby maximum call option open interest is at 18,500. Thus 18,500 is the strong resistance for this expiry. And the maximum nearby put option open interest is present at 18,000. So 18,000 is the strong support. For Bank Nifty, based on change in open interest, again it's similar to Nifty, some number of new put option open interest are added at below 43,500 and significant call option unwinding took place at below 43,300. Again, it's hard to draw any conclusion from this. However, based on overall open interest, we can see that 42,500 level will be a strong support for this expiry and 44,000 level will be a strong resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers educational purpose only. Thanks for watching.